at some point, I do expect Bitcoin and Ethereum to crack and come down. And in general, that's not going to be good for the alts, because if you have people getting scared even at the top, the best. I mean, Bitcoin, again, if there's one that's going to survive, that's not going to be regulated by the SEC, it's Bitcoin. If that breaks and starts to collapse down, let's say it even gets back to 20,000, very, very hard for money to feel comfortable to go into the even riskier assets like the Cardanos and the Solanas and those other ones as well.
Price action across the crypto market remains tilted to the downside as investors and businesses digest the consequences of the SEC's charges against Binance and Coinbase exchanges. The lawsuits have also affected the decentralized financial DeFi markets by reducing total liquidity, and most analysts believe that more pain is on the way. Hello and welcome to Money Talks. In today's video, we have Gareth Soloway talks about the Bitcoin crash and the future of the crypto industry with the ongoing SEC actions against Binance and his opinion on the meme's coins. So without wasting any time, let's get into the video.
But right now, it's altcoin collapse. I think you and I both remember about a month or two ago when Bitcoin was knocking on that 30,000 door, everyone was saying, get ready, load the boat for the alt season move here. This is going to be it, remember? And we know that that did not occur. And one of the things that I brought forward, which is a very logical way of thinking, is I love to use this this kind of example, which is if you just take a market with 10 people in it, right? And at first, there's no one long a stock or a crypto, but slowly people start buying, right? So when you get to the point where everyone's saying the altcoin season is going to happen, get long, essentially everyone that is long is going to have gotten long. So let's say all 10 people are long. If prices haven't moved up at that point, logic dictates that there's no one else to buy, and all it takes in the market is one or two negatives, one or two sellers, and people start panicking and then start dumping. And so I think anytime in the future where you hear like, oh, this is going to happen, and by the way, this is getting into the halving of it too, and I'm a skeptic that this next halving is going to have the impact that the last ones have, because that's all I hear now. Oh, don't worry, the altcoin, don't worry, the halving is coming up, just be ready for that. And right away, I'm like, that makes me nervous, because then everyone is getting long for that halving process. And it means that, again, who left is to buy. I think regulation, I don't know, Ben, how you feel, but without regulation framework, I think crypto's in a heap of trouble for a period until we get that regulation. I just wanted to show that Bitcoin dominance chart because I think it's such an important chart, how you've been knocking on this 49% level over and over again. And then look at what's happening right here. And one of the things you're mentioning is dead on, is number one, charting as a chartist, which is what I do, is that it tells you the more you knock on a door, the more likely eventually you break through. And so in this case, this door was a firm door stretching back to really 2021, right? And again, I'm big on analogies and examples. Think about this, folks. When you go up to a door, let's say it's locked, let's say your cat's in there, your house is on fire, you really have to get through that door. You're going to run against it, bam, into it, right? Chances are it's not going to break the first time. You do it again, it might start to crack. You do it again, it cracks a little bit more. By the fourth or fifth hit, that door is going to give way. Think about charts and resistance levels the same way, where you're running against the door. You're running against the door over and over again. Finally, it cracks and breaks to the upside. So I think that gives you that idea. And I think also, in Ben, you correct me if I'm wrong, but I think people have to remember that the Bitcoin dominance is a shorter term trend, meaning that if you go back further, I mean, it was way, way higher just before that 2021 bull market.
On June 5 and June 6, the United States Securities and Exchange Commission filed civil lawsuits against two of the largest centralized exchanges in crypto, Binance and Coinbase. The SEC claims that 61 different cryptocurrencies, representing $100 billion in value, are securities. One of the 61 crypto tokens listed was Algorand, a token that in 2019, Gensler called a great technology, which seems to contradict this latest enforcement action. The enforcement actions have sent liquidity at Binance. It was down by 78% since the lawsuit. In addition to lower liquidity, the Binance exchange saw major balance decreases in stablecoins, BTC, and Ether. Stablecoin balances are down over 20% since June 5. The news has prompted Robinhood to delist 3 of the tokens the SEC listed as securities. Robinhood has given users until June 26 to withdraw assets or be forcefully liquidated. This means that over $1 billion can potentially be liquidated between the three coins within 2 weeks.
So a couple things in terms of real world, like being in it. So the same things in terms of what happened in 2021 and even what happened over the last few months with the meme coin, shitcoin kind of situation where you had these people that were they were bringing to market anything. I mean, it could have been like, hey, we drop ship, widgets. It like literally meant nothing, but they would name their company widget.com, right? Pets.com, like all these .coms. And instantaneously, they would shoot up hundreds of percentage. They would 10x, 15x, 20x. You'd have these pump and dump schemes, which, again, unfortunately, crypto Twitter and some of these other things, that's happened as well, where you had these people that would go on these message boards. Back then, by the way, the internet was in its infancy, but you still had these like Yahoo message boards where people would go on and pump and say, oh, this is going to be the next greatest thing. It was kind of the influencer type group of the early ages of the internet. And so you had the same mentality coming into it, which again, if you notice in these crazy periods and other assets, you'll have the same sort of thing. People repeat, leopards don't change their stripes, as they say. And so you have the same sort of impact, the same sort of bad behavior, if you will, that goes on. And by the way, you could go back to the 1980s with you look at the Jordan Belforts and stuff like that with the pumping of the penny stocks and stuff like that. I mean, it happens every so often because greed and fear never change. Right. So the greed of people will make them want to believe that whatever it is, even if they know deep down it has no value, they still believe that they can 10x their money and then sell it to someone else at a higher level. And that in and of itself was what raised flags for me, is just being like, holy cow, I'm having like PTSD flashback from the 1999, 2000 level. This is exactly what people were doing, and look at how it came out. And so I think for me, that was like the real recognition of something's wrong here. When you have things that are being shilled that do not have any intrinsic value or use case even, that's a warning sign. So again, the data you're talking about, I think, is really important, Ben, as well as looking at the actual data as well.
According to U.S. Bank Analysis, which incorporates more than 1,000 data points, investor sentiment about the current state of the economy remains low. According to Terry Sanvin, portfolio manager, chief equity strategist at U.S. Bank, the improving performance of small and mid-sized companies is notable. The small-cap Russell 2000 advanced 4.6% in the first 2 days of June, nearly twice that of the S&P 500 and NASDAQ Composite. Despite the increase in equities, crypto price is not following suit.
So 2019, you're right. You had a lot of this kind of going on. It was kind of like the precursor to the big one, if you will, which occurred in 2021 and all the way up into recent times. And I think the difference maker is that once we hit 2020, there was this flood of liquidity, right? You had so many situations where people were locked down, so they weren't driving, so they weren't spending money on gas, they weren't going out to eat, they weren't spending on money for food. The Fed, the government, the U.S. government was sending people checks if you made less than X amount of money. And so a lot of people were just sitting behind their computer looking and seeing what was going on, and they have more and more money that they had in terms of liquidity. And we know the Fed was flooding the banking system with liquidity. And so it kind of created this almost tidal wave of, hey, I've got lots of money, I can't do anything with it, let me figure it out. Oh, this is like, it's almost a gambler's mentality. Oh, this looks like something I can do. And all of a sudden you hear about stories about Dogecoin and someone making $5 million on Dogecoin. And it's very much like the mentality of the lottery, right? Deep down, we know I play the lottery when it's like above $500 million, right? That's like my key thing. And deep down, I know I'm not going to win, but it's just fun. It's exciting. And so you get these people to kind of have this mentality of saying, hey, listen, if this person can do it, maybe I can win that lottery and 10x, 100x my money. And I think that lured a lot of people in. And then now the Fed, I mean, that's the bottom line. The Fed is sucking out all this liquidity. And that makes it very, very tricky it basically makes it tricky for scams to exist when you suck out liquidity, right? Think about Bernie Madoff, right? Bernie Madoff, as long as things were going great, he could pay off investors that wanted to pull out with more money that he was taking in. But as soon as we saw the 2008, 2009 collapse and people freaked out and he wasn't getting money in the door, that's when these scams are exposed. And I think that's so important for people to understand.
So is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.